Why should
Yeah,
those who join should get penalized for others' delay?
yeah, absolutely. Absolutely. Yeah, let's get started. Yeah, just a second. I'm just going to share the screen. Just let me know if you're able to see the screen. And we are just about to get started. Got a few more people joining in on the group, but yeah, let's get started with it. So, thanks a lot to Mehul for helping out with this, and starting off with this set of sessions. We've done a few uh, right now. Right, we did the the in-person session back in December, and then we did also the few Zoom sessions as well. Right. So basically, today's session is going to be a catch up of sorts in terms of what all we have covered so far, and also the opportunity in hand in terms of using ecoeconomics, etc. So first of all, no part of this would contain any financial advice. There wouldn't be any financial advisory sort of work being covered as part of this. And the presentation is for the use of professional investors or traders only. Right, it is not oriented towards a typical retail investor, though the research alone can be used by retail investors as well. It does not constitute an offer of securities, right? And if there are any questions or anything, please contact Helix for any further help with respect to that. So, first of all, starting off, who is Helix? We are a general partner firm based here in London. We've got two sides of our business. One side is the assets under management. We run a stock index that has institutional AUM on it. We also have a private hedge fund. This is primarily targeted towards high net worth individuals and family offices. The stock index is going live as a public index next year, and we expect to launch index funds next year. So we're part of that regulatory roadmap to become a UK benchmark next year, right? And as part of that, we also have a AUA business, assets under advisory. There is a research newsletter that we run, around 1,000 free subscribers, plus about 10% of them are paid subscribers. And then we also run trading signals. The trading signals were primarily sent out to trader communities and prop firms. Right now, we also offer a subscription to the trading signals. I'll post a few links on the chat, so that should give pretty much the information for all of this. I think I'll probably do all of it in one go, just because of the fact that I might be talking for most part of the time. So I might just share all of the links in one go, and maybe I can even pin it as well on the chat. So there are a bunch of links that I've shared on the chat. Uh, right. So how to get the book. There are two books. I'll talk about that, and also the various signals, etc., etc. All of that goes in this particular thing, right? We also offer advisory services. Sorry, I go a little bit quick. Also offer advisory services. Primarily, it's been for institutions and a few family offices at the moment. We run master classes. Last year, we ran a masterclass primarily focused on small and medium businesses. And we also run masterclasses for prop firms, basically for prop traders to use some of the insights and trading signals that we do. Currently, we are offering the masterclass also for professional investors and traders. I'll talk about that in some time. We also do commercial finance broking for businesses that align with ecoeconomics. We are able to get a slightly lower interest rate than other commercial lenders because we use what is called as the sustainability linked loan structure. And with that, we are able to get basically a slightly lower interest rate for businesses that use that. So what is ecoeconomics? Unlike ESG, unlike all of the eco-related stuff that we generally hear in the market, this is basically more economics than ecology, right? This is the capitalistic side of sustainability. It's not the idealistic side of sustainability, it's the capitalistic side. And by saying that, what I mean is uh, there is a triangular relationship between financial, environmental, and social sustainability that makes certain businesses very, very profitable. And for that, they have a few underlying pillars. One of them is that at the unit economics level, they are quite profitable. And secondly, these businesses have an ever increasing market adoption for their products and services. And one of the reasons why many of these businesses, by nature, are quite profitable is because of the fact that they target the younger generations, the under 30s, right? And that particular group has largely contributed to the highest amount of growth in market adoption for these businesses. Uh, they have the highest lifetime value and the lowest customer acquisition cost in their respective sector. That is the core of ecoeconomics. And so far, we've identified more than 1,000 businesses around the world. There can be many, many more that align with this model. So these are not the businesses that are going to say, oh my God, there is a new regulation on environment, whatever. Now I'm going to be less profitable. Nor are they going to say, no, I'm going to drop my climate targets because it will affect my future cash flows. Right? These are not those businesses that would generally do that. Right? So that's pretty much, these are uh, not the ones that are likely to do something like that. Right? So that's pretty much the core of ecoeconomics. There are two books on ecoeconomics. The first book came out last year. It is primarily the business framework behind this and how businesses can implement ecoeconomics in an easy to implement step-by-step kind of a fashion with a lot of examples. Uh, Businesses can implement it. People, as part of their careers, if they want to learn this model and use it as part of their as part of early stages of their career, then they can pretty much use that. The second book builds on the first book, but then it takes an investing lens, right? Now, essentially, the question that we're trying to answer here is, yeah, we say more than 1,000 businesses follow this. A number of them are listed companies, a few of them small businesses, a few of them medium-sized businesses, etc. How do I invest in this and make money, right? So that's the answer that the second book kind of talks about. That's what it does. Uh, and then, as I mentioned, for as part of Helix, there's basically an active side and there's a passive side within the AUM. For passive investors, there is Helix Transition Fund. I've posted a link for our fund on the chat. It's an exact replica of our stock index. Uh, it uses a standard standard limited partnership, sort of a structure, UK limited partnership, and it's available for high net worth individuals and family offices. If you'd like us to manage the money, then this is basically a method for high net worth individuals or family offices to use, right? And I'll move on to the next slide. This is our 2024 performance on the Helix Transition Index. We were up 84% last year. This year, as of January end, we already have crossed the S&P 500, and we are expecting pretty much a similar sort of performance as of this year as well. This year is expected to be quite a bumpy ride, as I mentioned right at the start of the year. It's expected to be a bumpy ride. There are a number of factors that are there. So we are quite hopeful, and we are quite cautious. We have our risk calibration engines in place in terms of making sure that we are pretty much on the same level as what we had last year, right? Some considerations. High net worth individuals or family offices can invest in the fund. So some of you might think, I'm a high net worth individual, but I'd like to invest lower than 100K and to start with, and then we can increase over time. Yeah, we can always do that. We use what is called as a side letter. This is a contract to increase contributions over time. You can set your own time frame. It can be anywhere between 3 months to 60 months all the way. These side letters are available for anybody who is a high net worth individual. And the only restriction in here is that the redemptions can start 12 months after the minimum subscription has been met. Minimum subscription is 100K. So if you're starting off with increments of 10K, then by the time you reach 100K, and then there's basically a 12-month redemption holiday from that point by when any redemptions can take place. Or if you're coming in with 100K, redemptions can start anytime after 12 months. Right. Some more considerations on this. Who can co-invest? Right. Either a spouse or a child can co-invest. Right. In a number of cases, what we're seeing is one limited partnership can be shared between co-investors. Basically, one high net worth individual can bring in 2 or more co-investors who are either spouse or child, so they can be part of the same limited partnership. Limited companies can invest in the fund. So the limited partner designation in itself can be either an individual or it can be a limited company. So it can be surplus cash that a limited company can invest into this. Some other cases that we've also seen is 2 or more persons want to invest together. One of them is a high net worth individual, the others are not. But you want to basically invest together. In such kind of a case, if the co-investment criteria does not fit, meaning you're not related in order to co-invest, then we've advised, we've asked some of them to talk to their financial advisor, take help with respect to this, and possibly it can be a limited company. It can be formed among 2 or 3 individuals, and then you can invest in the fund, right? These are some of the ways in which you come in. So for traders and retail investors, we offer another website. This is www.somivj.com. It's in my name. Right. Any free subscriber, they get anywhere between 5 to 7% increase over the S&P 500 by following our research. How do we know that? Because we run model portfolios, we model that behavior, and we also check with a sample of free subscribers every quarter. Not everyone would respond to our calls for maybe a quarterly review, but quite a number of them do a quarterly review with us, and we see that they're able to get anywhere between 5 to 7% above the S&P 500 by following our research. Paid subscribers, These are more serious long-term investors, and they get anywhere between 14 to 18% additional returns by following our research. Uh, Many of the prop firms that we've interacted with, the trader communities, and right now also the subscriptions that we offer for the trading signals, uh, they're able to get anywhere between 80 to 200% above the S&P 500 by following our signals plus the research. So the signals alone uh, can't be of a lot of value. It is the signals plus the research that kind of gives a lot of value together, right? Uh, so I would say as part of this system, right, in the last 15 years of stock investing, trading as a prop trader, there are a few things which I think you don't need. Number one is hype stocks, right? This is likely to become blah 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 in the next 2 years, in the next 5 years, in the next 20 years. I don't believe it. If it doesn't show up on the financial statement already, we don't add it in. So we don't use any hype stocks. Uh, we don't use any crypto. Reason being, there's no fundamental asset underneath that. We look for a fundamental asset when we are doing our security analysis, and it beats security analysis at its game. So we don't use that. There are no fancy algorithms here. It's very simple, manually placed trades that anyone can do, right? Uh, we don't use any investment gurus. Anybody can follow this research, and we can implement it. In fact, in the later part of this presentation, I'll talk about the masterclass where you can learn this from us, right? Ecoeconomics as a book is available. There are a few investors who have taken that and they've built their own investment thesis based on it. But if you would like to develop your own portfolio based on this, we run a masterclass to teach you how to basically go about with this, right? No social trade methods. You don't need to follow every single trading signal. You don't need to use every single method and every single. You can form your own watch list. You can create your own filtering mechanism for the basically for the signals. I'll show how this works as we go along. We don't use any fancy software, right? It's plain vanilla trading view. It's a free software that we use. If you get to the point where you're using most of the free features on TradingView, go ahead and upgrade it. But generally, for most people, the free version of TradingView is more than sufficient for a lot of the analysis that we do. AI traders, we've heard so much of AI traders coming in and people saying that you can use this to boost your gains, etc., etc. You never know when it will hit, and it'll take away all of its gains and lose your money. And we don't use any such AI traders or anything, but we've been able to double our investment account for our investors for the last 15 years, right? So personally, I've been a prop trader for 15 years. My system works for the last 15 years for various investors. We've been able to double the investment account every 6 to 8 months very easily without any of this hype or crypto or AI traders or fancy software or any gear or anything that you need, right? Our investment research, there's a link that I posted on the chat, soumyvj.com. That's the research site. You go there and you register as a free subscriber. You will get every week 1 or 2 stock recommendations. One of the things that we don't do is we don't bundle you with thousands of stock recommendations coming in. It'll be only 1 or 2 stock recommendations in a week. We all understand everybody's going to be employed full time, or they're running their business and they're probably doing this part time to maybe increase their income or maybe build wealth for the future. So we're not going to bug you with 1,000 things. It's going to be only 1 or 2 good quality stock recommendations. Even as a free subscriber, you can take that. And the way we do that is I'll probably stop sharing this one, and I will need to share my trading view. Go on to trading view in a second. Okay. Uh, So on Trading View, just going to share the screen. Let me know if you're able to see my screen. So that's my watch list, right? So every time you receive maybe a, a stock recommendation, do your own analysis and then add them into your watch list. And then on Trading View, what you can do is if you right click this, you can set a certain color to it, right? One of the things that I do a lot is if I find for sure that Netflix is a business model that I understand really well and I definitely want to invest in it, I will put that on the green list, right? If I find that maybe Procter and Gamble, I need to do a little bit more research and I'm not too sure about how they make money. Though I understand that they're making a lot of money, but I'm not too sure about this. I might want to put them onto, you see my screen here, you'll see that there is an uh, amber color in there. So you can go and set different colors. And then maybe Boeing, right? I find that their debt is very high, but they still need to make 3,000 plus planes, right? They have an order book which is like 3,000 plus planes, but their debt is very high in comparison to all the other companies that I'm seeing. So I need to analyze this a little bit more. And when I get any trading signals, I'm probably going to be a little bit more careful. So I might want to put them onto the red list. So that way, on Trading View, you can go and classify your watch list very easily, and that kind of helps you determine how much capital do I want to assign to my red list versus my amber list and my green list. I'm going to switch back to this presentation now. I might need to do this a few times. Where am I on the presentation? Yeah, there you go. That's the presentation. Let me back onto the presentation now. So conduct further research on TradingView before you can decide on which stocks to invest. Set up a watch list. I also set up a number of chart settings, right? So I want to understand this particular stock, how it moves over multiple time periods, right? On one chart. So supposing I'm using like a 1 hour chart, right? I might want to see how it is moving over multiple time periods. I also want to see what is the volume delta, right? So I've mentioned in the previous, trading workshop that we have two friends in trading, right? And everybody else is an enemy, right? So who are those two friends in trading? One is called volume and the other one is called volatility, right? So I want to understand how the volume is going at any particular point of time. So I set up something called as a volume delta, which tells me in the market, is there more of buy orders or are we getting more of sell orders, right? If it is sell orders, it's going to show you this kind of a red, candle here in the bottom of the screen. You can see here, this red one. It shows that, sorry, right? Shows that there is basically a more of buying orders. So it's auto matching at any point of time, isn't it, in the market? So you find that. And then what you can also do is you can set up other indicators. I have very limited, I can say very limited regard for technical indicators and chart patterns, unfortunately. Uh, and the reason for that is because I did a research back in 2016. Uh, I took the S&P 500 and I took about 20 common technical indicators like the RSI, the MACD, the Bollinger Bands, etc., etc. I set this up as, for the RSI, if it meets maybe 25, you go long. If it goes 75, you go short, right? I set these conditions and tried implementing it as a strategy. What I found was it is only about 10 to 15% effective. Most of the indicators are only about 10 to 15% effective. The simple Bollinger Bands are probably more effective than any other technical indicator that you would ever use. And the Bollinger Bands are about 23% effective, right? That is the best that you can ever get with technical indicators. If you combine 20 technical indicators, you're probably reducing the number of trading opportunities, but you're not going to increase your profit factor at all, right? That is probably the reality with respect to chart patterns and technical indicators, unfortunately. So I don't use many of them. I do use things like AMOGD, which is the Advanced Market Opening Gap Detector, right? This detects what is the gap when the market opens for this particular stock, right? So when it opens, is it opening in the positive side? Is it opening in the negative side? Kind of test that. We also use another uh, indicator called Vidya, which is volume integrated directional indicator. So again, I'm using volume and volatility to kind of bridge the gap and see if this is a worthwhile opportunity to trade. Again, there are only two friends in the trading game. One is volume and there is volatility. Every other indicator and chart pattern has very low, efficiency as far as we see, right? So, what do paid subscribers get? Uh, right? It's not going to be a lot more detail, right? It's not going to be pages and pages more of investment research, but then they get to see a forward valuation, right? So for this particular stock, looking at this particular company's growth and the forward-looking statements from the management and how they're performing so far, what is the expected forward valuation for this company? What is the investment landscape looking like, right? In the market that they are operating in? What is the investment landscape that they are operating in? What is the risk landscape? Is there a larger geopolitical risk here? Is there a larger uh, currency risk that they're exposed to? What you should be aware of as a professional investor, right? You get to see that. You also see a number of custom financial models, right? One of them is called as a financial stability model. We're looking for companies that are financially stable over periods of time. And then secondly, we also have a growth model. So we want to understand whether this company is growing at the same pace as it was growing in the past. And then the third one is the statement reliability model, right? So I think we all know that many companies could be very, very, I can say, fair and correct from an accounting standpoint in terms of their financial statements, but it might be very unfair to investors, right? One big example that I keep talking about is a number of tech companies in the past, post-COVID, post. There's somebody on, if you could go on mute. Yeah, right. So, yeah. So, what we find is many tech companies, what they did was in the post-COVID timeframe, they decided that they were signing up agreements with customers which are 5 years and whatever, and then they didn't want to compensate their sales teams with instant sales compensation. So what they did was to defer the sales compensation over a 5-year period, right? So all of this goes fantastic, really well, as long as the company is making more and more of these new 5-year contracts, right? But when the musical party ends and the musical chair is out, right, that is when this becomes a problem for investors, because what is going to happen at that time is revenue is not increasing at the same rate at which uh, you were expecting over the last few quarters, but then costs are not going to decrease because the costs are still based on deferred compensation over time, right? So we see a few of these which are from an accounting perspective, from GAAP and IFRS, perfectly fine, perfectly legal. You're not breaching any accounting rule. Your auditors are going to give you a perfectly clean check with respect to this. But it is very, very unfair to investors, right? Because as an investor, you're looking at it and you're saying, okay, this one is a fantastic tech opportunity. I'm going to go sign this up. But then later on you find that when the party ends and basically the music has stopped and the musical chair is out, then you find that this is not really a good bet at all, right? You're left with a situation where the market reacts uh, more violently, and you kind of get basically stuck with that. So we have a statement reliability model which kind of checks these kind of quirks, whether it is being fair to the investor or not. So again, make your investment decisions based on the research that is available, plus your own research using TradingView and other tools that you might have access to, right? And then uh, we have trading signals. We supply trading signals. I posted the link on the chat. Uh, so these are basically no nonsense kind of signals. There is no noise, right? Meaning you will not see 100 signals in a day. You will see a handful of signals every single day, which is carefully selected based on our stock index. So it'll only be the index stocks. It'll only be one of the stocks that we have written about on our research. So if you've read our research and you've added the stock onto your watch list, here is an opportunity for you to enter the market with this. So here is a typical trading signal. uh, it gives you a buy direction, buy or a sell direction, and then the ticker symbol, which in this case is Ingersoll Rand, and there is a current price at which the signal has been generated. There is a recommended stop loss and a maximum take profit. Again, the stop loss, a number of times what we hear from traders, particularly prop traders, tell us that your stop loss is too wide, right? We don't do stop loss of so much. Here's the backing behind this, right? More traders lose money by having a smaller stop loss than you know. The key here is having a losing trade, which will then get corrected over time, versus closing the trade and booking the loss, right? That in a lot of cases is the choice that many traders, basically many traders make. And again, it's backed by research that every stock has what we call as an average daily range, right? So that average daily range tells you this stock is likely to go up or down by 2%, right? So if you have a stop loss, which is 0.5%, and the stock is moving against you, you're likely to book a loss. But instead, if your stop loss was at 3%, and the stock moved down 2%, but then it started going up again, you're going to be in the money. That pretty much is the logic behind having a slightly wider stop loss, and the stop loss is based on the average daily range of each and every stock. So we analyze that and we set basically a stop loss recommendation and also a maximum take profit recommendation. So how to use this? First of all, create a watch list. You can do this very easily on TradingView, or if you want to use Excel or Google Sheets, go ahead and use that as well. You can order your watch list as red, amber, green, right? Use whatever color is comfortable for you. I use red, amber, green just because of the fact that the red signal tells me I'm not going to put a lot of money into it, right? And the green signal tells me, okay, this is my comfortable list of stocks that I want to trade. Then split the investable capital as 5-20-75 or whatever ratio works best for you. I split it 5-20-75 because of the fact that I want to put in lower amount of money on the red part of the watch list and more amount of money on the green part of the watch list. Whatever ratio works best for you, you can do that. I also offer a trading strategy review, trading and investing strategy review. So if you'd like help with that, and you can bring your track record, you can basically set up a call and we can go through your track record to see if this is working for you, right? I've also given a link to my public track record, right? On the chat, you'll see the last link over there is my public track record. So if you click on that, you'll see how my track record is doing over the last, I think, 8 months or so, right? That is, I think, close to about 100,000 trades. So that is all that you can put online. So you can see basically should say the public track record over there and how we've been profitable over this, right? You can use you can use Trader Sync, right? What you can do is you can upload every day or every week. You can take your uh, your list of trades from your trading system or your investing system. Your broker is going to give you basically uh, a statement. You can upload this statement onto Trader Sync. I've shared a link to Trader Sync on the chat as well. You can upload it there and you can analyze it, right? That will tell you which ones are doing well. Did you set did you enter the trade at the right time? Did you invest at the right time? Did you book the profits at the right time, etc.? It can tell you that, right? Um, then step four, something that I do a lot, and I find that all the institutional traders do this very well, is they further split the capital among the stocks or securities in that particular list. So if my green list has got 5 stocks, for instance, what I would do is I don't allocate 75% of my capital to all the 5 stocks. I will further split it to certain set of stocks, right? I might want to give, let's say, Ingersoll Rand, I might want to give it 5,000. I might want to give another company, maybe let's say Meta, for instance, I might want to give it 1,000, etc. So you might want to split it further, and there are basically mechanisms to kind of find out how to do that. There are tools that are available which can help you construct the portfolio. I'll talk about it in some time as well, right? And against each of the stocks, you go and set up a scaling factor, right? And that scaling factor is going to be based on the average daily range for that particular stock. So let me just share the trading view again, right? Let me go on to trading view. Let me share trading view now. Where is it? Yeah, can share trading view. Now on trading view, when I go into the stock screener, right, you will see here on the performance tab, you have a plus symbol here, and then if you type daily, it will give you the average daily range. I might want to move it up front here, right? I can order this. So some of these stocks are, they're going to change maybe 1.75% in a day. Some of these stocks are going to change, like Booz and Hamilton, for instance, it's going to change 4.09% in a day, right? So this then determines how much of profits you can make, but at the same time, how much of a loss you can make in case you're in the wrong direction, right? So that can then guide you in terms of how to set a scaling factor, right? I'll tell you how to use the scaling in just a second, right? I will go back to the presentation deck. How to use the scaling? So I got a signal saying Ingersoll Rand. I get a buy signal. I have to go long on Ingersoll Rand, right? And I have maybe 10,000 as trading capital that is available for Ingersoll Rand, right? For 10,000, I could maybe buy, let's say 50 shares, right? I can buy approximately 50 shares. But then what I do is I don't buy 50 shares in one go. And I think this is one big learning between institutional traders and everybody else, right? No institutional trader is going to bet all trading capital in one single shot alone, right? What I would do is I would enter, when the signal arrives, I would enter that particular trade with just 5 shares. Instead of 50 shares, I'm only entering with 5 shares with the same stop loss and take profit that was recommended. I wait for the market to move favorably. right? When I am in profit, I continue to scale the trade, right? 5 becomes 10, 10 becomes 15, it becomes 20, it becomes 30, it becomes 40, it becomes 50. Until I reach that limit of maybe 50 shares, I keep adding again and again. And each of those trades, I have the same stop loss and take profit, right? So that one stock, one trading signal that I got today, what I'm doing is it said Ingersoll Rand, this is the price, this is the stop loss, and this is the take profit for this. Now, what I'm doing is I'm going to trade that particular stock in a direction that is favorable to me. So I buy 5 shares, I wait until the market is favorable, then I go and increase the 5 to 10, then go to 15, then go to 20, etc. Right? Continue scaling until the market is favorable. Right? Then you've got a stop loss which was set at what was the price that we get? Right? The stop loss was at 83. Right? Now you find that the market is about 3% up. Your initial trade, it is now at about 3% up. Now you move the stop loss. Yes, Nigam, you have a question. Happy to take that. Yeah.
Hi, Swami.
Yeah.
So when you said like scaling up,
Yeah.
adding stock when it
Yes.
favored. So do you mean
Yes.
that the subsequent addition will be again at the market signal, or you will judge by because you got a signal, you entered the trade,
Correct.
and you
Correct.
said like you put a 5 in to start with,
Yes.
and then at
Yes.
what stage will you scale up? You will wait for a retracement or another
No,
signal,
no,
or
no,
how you
no,
do?
no. Most of the cases, the retracement is not going to happen in a short period of time, right? You're probably going to be waiting much, much longer. So you don't wait for retracements. As long as the market is favorable, continue to scale, right? So it might have gone up by 0.5%, but go ahead and scale your trade. It might have gone up by 1%, go ahead and scale your trade, right? Keep scaling your trade until the market is favorable, right? So
Okay.
we find that in stocks, particularly US stocks, uh, the as long as the momentum is there, you can expect to keep scaling as many times as needed, right? So in some of our stocks, uh, we use a scaling factor of 0.5%. So with 0.5%, what it means is that my risk level is only 0.5% to start with, right?
Hmm.
So if I allocated, let's say 100,000 against this particular stock, I'm only going with 0.5% of that risk to start with. And then I'm going to scale this all the way to 100,000, right? So I keep buying, or I keep selling until the market is favorable. You don't wait for a retracement. You continue scaling along the way, right?
Hmm.
Uh, then the next step here is when the market has moved up by about 3%, I usually treat it as 3% just because of the fact that most of the index stocks that we are taking, we use stocks that have a ADR percentage between 0.5 and 5, right?
Hmm.
So I take like the midpoint essentially, right? So when it goes to about 3%, I will move the stop loss to break even.
And- But I have just one small question too. When you said
Yeah,
keep scaling, so when you buy
yeah,
another 0.5%, then
yeah,
0.5% of 200,000. So subsequent entries,
yeah.
the stop loss will be still to the original one, or then
I would,
or
I will still use the same stop loss.
okay,
I will still
interesting.
use the same stop loss and the same take profit.
Okay. So your your,
I will
your
not change it.
take profit is constant. Your stop loss is
Stop
constant. You
loss is
just scale
constant.
up and scale down
Yes,
as
correct,
necessary. All right, got
correct,
you. Thank you.
correct, 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 right. Uh, yeah. So,
Hey, Somi,
yes,
this
yes,
is
again,
Akhil.
yes, again.
Hi, sorry. Sorry, just maybe I misunderstood the scaling point. So you said 0.5% of your capital is the scaling factor.
Yes, 0.5% of the capital that has been allocated to that particular stock. In this case, I've taken that as a scaling factor. So again, scaling factor is also dependent on the ADR of that particular stock, right? So, so every stock will have a different scaling factor, right? So if a stock is likely to go up by 5-6%, for instance, right? You can't use a 0.5% scaling factor because you lose out in the market, right? You're likely to lose out in the market. You got to use a much larger scaling factor, or otherwise you might want to reduce the amount of capital that you allocate to a stock that is like 5% ADR or whatever.
Okay, so let's say imagine the price was 100, and the market is moving favorably. So you said whatever's the scaling factor. So what does that 100 have to go to that you put the next bit in, that you scale it in? Maybe that's what I'm not understanding. Sorry.
Okay. Again, that is largely dependent on individual's risk appetite and also the specific stock performance, the volume and the basically the beta of that particular stock, etc. Right. So what we tend to do is we tend to use basically a set of scales at 0.25, 0.5, 0.75, 1%, 2%, etc. for many of the index stocks, right? So if the stock is part of S&P 500 or it's part of Dow Jones or NASDAQ, etc., these stocks I can use pretty much of a scaling factor of 0.25% or 0.5%, right? If it is not an index stock, then you have to analyze that stock really, really carefully before you set a scaling factor, right? Generally, index stocks tend to mirror the, basically the broader market, right? There is very limited, I can say, divergence from the broader market when you take the case of index stocks, and with that we tend to use a smaller scaling factor. But then if your stock is not an index stock, then analyze it further in order to set what is the right scaling factor. I've seen a few traders take 1% scaling factor. Right. I've had a number of prop traders use 1%, 2% scaling factors and all that, right? But I tend to use something lower, 0.5% in most cases. Some of the index stocks I tend to use 0.25%.
So
does
is
that
it
answer your
safe?
question? Okay. Yes, Nigam.
Is it safe to say that for any stocks within the index funds, you try to keep a smaller scaling factor?
Absolutely.
Anything outside the index fund, any stocks which fluctuates, whose ADR is quite big.
Correct.
In that case, you can have a proportionally higher
scaling factor, right? So in those cases, what you do is to enter at a very small range, and then you scale more rapidly because the stock is going to be picking up more momentum during the day.
Yeah, the swings are big. Yeah.
Exactly.
Okay. Got you.
Exactly.
So then you try to exit the market quicker as well. Otherwise,
Correct. You might be caught in that musical chair again. Right?
Yeah.
Right.
Okay.
And again, for that, a couple of things that I tend to advise a number of traders that I mentor is move the stop loss to break even at some point. I tend to advise 3%. If it is 5% that works for you, go ahead and do that. Right? Go ahead and move the stop loss to break even. The second thing that you also do is if the stock is up maybe 5%, set up a trailing stop as well, right? The way a trailing stop works is that if you set maybe a trailing stop of, let's say, 50 points, for instance, right? As long as the market is favorable for you, it doesn't do anything. It just stays there. If the market is unfavorable to you up to 50 basis points, up to 50 points, then it's going to cut off the trade, right? It's going to move the stop loss further, and it's going to protect your profits, right?
It's interesting how you do it with the stop loss, movement.
Yeah.
What is the reason that you don't do it on a risk to reward ratio, that it moves, if it achieves like 1:3 or 1:2, and then you move it to your, break-even point or at the entry point? You doing it by percentage. Is there any specific
Yes.
reason why you do by
Yes.
percentage
Yes.
move rather than the risk to reward?
Right. Risk to reward is a very elusive ratio, right? In reality, it's a very, very elusive ratio. And it is basically a composite ratio, right? Risk to reward has to be seen in conjunction with profit factor, right? You might have an excellent risk to reward, but a very low profit factor, which means that your risk to reward is pretty much useless, right? So, how do you construct a portfolio which has a solid risk to reward and profit factor? You set lower benchmarks in terms of how you want to scale and how you want to protect the profits and minimize losses, right? So for a second, what I would do is I'm going to click and look at.
Can I just interrupt you?
Yes, you can.
Just before you make that. I'm going to speak in very plain English. This is very
Sure.
technical for me.
Sure.
But it
No
sounds like
problem.
what
Yeah.
you're saying, no, and that it's good. It's just education for me. It sounds like what you're saying is small increments and lots of them better than aiming for large increments and a few of them.
Absolutely.
I think that's
Absolutely.
what
Yes.
you're saying in
Yes.
this.
Yes. Yes. That is correct.
And
That is correct.
continuously.
And continuously, right? Very
That's what
true.
I've got from. If I've got
Very
that
true.
wrong, by all means, correct me.
Very
No problem.
true. Very true, Hitan. You made it very simple for all of us. Very simple for all of us, right? Now, I'm just going to share the screen with my own track record here, right? This is basically our trading track record here. So you'll see here, I'm aiming for a larger win percentage. And at the same time, I'm looking for a larger profit factor, right? So, so that is the reason why I'm actually going after scaling, and I'm setting basically stop losses, etc., by percentages, because I'm doing this in conjunction, and I'm doing this with a view that I want to keep my peak to valley drawdown at a minimum. And at the same time, what I also want to do is I want to maintain a very good Sharpe ratio for my portfolio, right? Only then the portfolio becomes investable. And at the same time, it is repeatable, meaning with this same strategy, I can use this strategy with any other stock as well, right? I don't need to, create newer and newer strategies for each and every stock. As long as a particular set of stocks fall within this particular, let's say, watch list kind of a criteria, I can use pretty much the same strategy. So what I don't want to do is to overcomplicate it. I want to simplify it, right? And I want to simplify it to the point. See, this is one big difference that I see between a number of retail traders, prop traders as well. They try and complicate it. A lot of them complicate it. But if you look at very successful institutional traders, I don't see complicated strategies at all. I see most of their strategies being very, very simple, easy to understand. It is based on sound numbers that they've analyzed, and they're going after it. And I know some of the institutional traders who basically double their account every quarter. And when I see that, their strategy is very simple. They're not complicating it, right? So So this link is available for all of you to see, right? You can see my my public trading record as well on that. I'm going to go back to the presentation, just have a few more slides to share, right? So so that to me basically is how I would go and set up trade, basically trading stop, etc. And the reason why I do that is I need to maintain it as a portfolio, and that portfolio has to have a pretty good Sharpe ratio, so that though I'm using leverage in order to trade, I need to have a Sharpe ratio that generates alpha for me and for my investors, right? We book profits on each and every trade. In case the market becomes unfavorable, right? This is something that a lot of traders ask me. In case the market becomes unfavorable, it hits the initial trade first, right? When the stop loss hits the initial trade, you close that trade and you don't scale anymore. That's it. You have minimized the losses at that point. Now, if you look at my own track record there, you will see a number of losses there, right? If you go and scroll through that, you will see a number of losses there. But all the losses will be lower amounts because I've only traded maybe 5 shares there, and I found that the market is unfavorable. I did not go and scale it any further, right? Had I gone with 500 shares there, my loss would have been much, much larger, right? That is the core of this strategy. It's very simple, very easy to use, and all of this can be done using very simple checklists, etc. Right? Some of the questions that come up, I get the same stock, but once it is a buy and other time it is a sell, right? So when the market moves direction, the signal is going to change, right? So if you get something like this, I would recommend, first of all, book the profit on your existing trade before you enter in the opposite direction, right? If you got a buy initially and you are in profit, you've got 5% profit, don't lose that, book the profit on that, then go into the sell direction. If we are telling you sell the same stock right now, that means that there is a change in direction. So use that. I received the same stock in the same direction on consecutive days and later on. It means it's a good idea to scale up, right? The stock is still moving in the same direction. So you can continue to scale up. And the signals are giving you pretty much of a reassurance that you can continue to scale. I expect more signals. Some of the prop traders say, you're only giving me 4 or 5 signals in a day, so maybe it's like we get so many. Sorry, we only provide signals. There's no noise, right? You're not going to get any noise. So sorry to disappoint you guys. It will be only 4 or 5 signals in a day, right? And these are high quality signals. These are the signals that we use ourselves, right? So so you're not going to get a number of signals. It's going to be only a handful of signals. And a lot of other people who use the signals are going to be those that are working full-time jobs and they don't have a lot of time to trade on their own account, etc. Right? Technical analysis doesn't agree with your signal, right? As I mentioned, most technical indicators have a very low efficiency rate, very low accuracy. Right? If you look at it over 5-year time frame, 10-year time frames, you look at a whole bunch of 500 stocks on the S&P 500 and you kind of analyze them, they have 10 to 12% kind of accuracy, nothing more than that. So you're probably not going to have a match with your technical indicators. What if I lose money by trading your trading signals? Yeah, not all trading signals are made equal, and that's the reason why we advise a stop loss order, right? You can view my track record and you can match it to the trading signals that we've given. Again, the question is, most of the trading signals made me money. Most of the trading signals made money for the traders that have used it. So why not use it, right? Some trading signals might be wrong, and that is basically the reason why we have a stop loss order, stop loss recommendation. And then, as I mentioned, a lot of the people are going to be working full time. Your trading signal arrived at 12 noon. How do I trade? I can't do anything with it. So one of the good things about our trading signals is it has pretty much of a 24 to 72 hour validity, right? So if you receive the trading signal at 12 noon today, you can trade it this evening. You can even trade it tomorrow. You can even trade it the day after. You still need to go on to TradingView and see if the direction is right for you, and you can still go on to it. But the signals are going to be valid for up to 72 hours. So it is not an instantaneous trade that we expect every single subscriber to do. Yes, of course, the market would have moved, right? If we recommended a stock at 69, 70, let's say $70, and then it's moved to 72, you're still in the right direction, you can still buy it, right? So you can execute it later in the day, or you can execute it the next day. We have a few people who say, no, I can't do it today. I might need to do it in the evening, or I'm going out this evening with friends, so I can't trade today. We might want to do it later. Yeah, still you can do that, right? Okay, now we're getting to a final part of this presentation. We're going to be talking about the masterclass. So initially I spoke about the fund. So that fund is based on the exact same track record, exact same thesis. And if you would like to invest in a fund, there is a link that I posted already on the chat. You can take a look at that. There is information memorandum available on that link. But if you want to become a profitable trader or investor, we run masterclasses. But we only take 10 traders at a time, right? Maximum of 10 traders at a time. It's going to be weekly sessions on a Saturday morning. It's not going to be during working hours. So any person who's working full time can still join it. You'll have 10 live Zoom sessions. I'm not going to be doing all the analysis myself. In the masterclass, you are going to be doing the analysis, because I'm going to be showing you what to look for. You're going to be doing the analysis yourself. You're going to be writing your own analysis reports, and you're going to be sharing it with the rest of the cohort. You're going to be sharing it with me, and I can give you feedback on this. You also get quarterly strategy reviews. We will also do monthly maintenance sessions. So these maintenance sessions are going to be like, okay, during this last 1 month, 3 of my stocks had earnings releases. This is what happened in the in the broader markets. Interest rates went up, went down. There was this particular Trump decision, this Trumponomics at play, etc. What is actually happening in the market? How am I going to be ready for what is coming up? So that's going to be part of the monthly maintenance sessions. You get access to the paid research. You get access to the trading signals. So that's going to be the masterclass. And we're looking at starting this early part of March, right? I've shared a link again on the chat that gives you all the details about the masterclass, right? This is not a class that is run by some rookie trader. It is run by a fund manager, myself. Our investment research has been in publication since 2021. We have 1,000 plus investors who are subscribers for the research. And if you are looking to understand the thesis yourself, unlike all the other GP firms who are going to tell you, we've got this thesis, it's completely closed. We've got it completely in the open, right? There are 2 books that are available. Go ahead and buy the book. You can understand the thesis even more, right? Some of you have got basically a physical copy of the book, but the second book is also available. So if you'd like to get a copy, feel free to go ahead and get a copy, understand the thesis a little bit more. So unlike other GP firms, unlike other fund managers who are going to have it very, very closed, our thesis is out in the open. We have other fund managers copying us. So you can copy it very much, right? If you're a business founder, you can follow the framework to deliver profitability in your own business. And our stock index is already available. It's available to institutions. So it is built on the basis of that stock index. It's available to institutions. And in last year, we had 84% performance. This year also we are looking at pretty solid performance on that, right? What is the financials for this? They're going to be 10 live sessions. I'm spending my time preparing for this, etc. I'm putting in my day rate on this. There are going to be 4 quarterly review sessions, and then what I'm saying is you're going to do 12 monthly maintenance sessions. You're getting trading signals. You're getting investment research subscription as part of the masterclass. In most of the cases, what I'm saying is in the first 1 month of the masterclass, try the paper trading on TradingView. Get yourself familiarized with what is happening on your trades. Then go ahead and use your own trading account. If you're using an ISA, you have a limit of 20,000 in a year. If you use that, you're going to be doubling that account in the year as we go along, using the signals, etc., and the mentoring that you're going to get. So that's a value of around 31,500 pounds that you're going to get as part of this particular masterclass. And the fees is going to be 5,000 pounds one time, or it's going to be 2,000 pounds over 3 months, right? If you have any questions about it, want to understand more, just ping me and we can have a chat on this, right? Anybody who wants to get onto this, there is basically the link that is available on the chat. Go ahead and try it out, right? Here is the course contents, what we'll be covering. In week 1, we'll talk about ecoeconomics, how it applies to investing, etc. We'll talk about business models, strategy. We use the endogenous growth model, right? Unlike most investment research work, we're not going to bring every company to its industry average, right? We're not going to track every company saying the industry average is only 5% growth, so this company is not going to grow more than 5%. No, that's not our model at all. We use what is called as an endogenous growth model, and that is one of the reasons why our stock index has been ultra successful. You will learn the endogenous growth model as part of this masterclass. It's in my book, but if you want to learn more, get onto the masterclass. We will be looking at the elements of financial sustainability. There are strategies for social sustainability that many companies use that deliver improvements on return in invested capital, right? Social sustainability, immediately you find that you go into ESG reports of companies, you see we put 2% of our profits in the CSR activity, and then we provided water bottles to this particular deserted place in this continent which doesn't have any flights on it, right? Right, you would basically see that in every ESG report, but that does not add anything to the return on invested capital. There are certain social sustainability strategies that they work with communities that are impacted that improves the return on invested capital. We'll figure that out, which company does well, how do you identify it, we'll do that. We'll look at environmental sustainability strategies that deliver improvements in profitability. We hear from many companies saying, we're going to drop our climate goals, it doesn't work for us, etc. But then on the other side, you're finding certain companies saying, I want to switch the type of industrial heat that I'm using. I'm going to put renewables. I'm going to use electric, basically I'm going to use electricity instead of gas. And I'm going to reduce my energy cost by doing this. And I'm going to reduce my carbon footprint as part of this. And it's not only carbon. They're doing things in water. They're doing things in basically the renewable percentage of raw material that they use, etc. Right? Then we'll go on to understand the investment landscape as it applies to ecoeconomics. And then margin of safety. When you hear margin of safety, you might think Warren Buffett. But this is margin of safety in the context of ecoeconomics. In the investment strategy, in the context of ecoeconomics, slightly different from what Warren Buffett says. It's more of a growth-oriented margin of safety that we'll be covering, right? Then the next 5 weeks, we'll be talking about the trading strategy. what sort of trade setups, checklists, indicators that you need to use if you're going to be aligned to endogenous growth, risk management strategies, what works for ecoeconomics related trades, understanding, interpreting, and sometimes disregarding some signals that you get with respect to volume and volatility in relation to this particular triangular relationship that you see. Interpreting trading signals in line with your watch list, and then scaling strategies to grow your account. Right? These are going to be the sessions that we'll be covering as part of the masterclass. Right? Again, every week you're going to be doing the analysis. You're going to be working as a peer group. You're going to be getting feedback from me. We'll review your work, etc. But a lot of the work needs to be done by the traders themselves. In the maintenance sessions, each cohort member, basically we are assuming that it's going to be 10. So 10 of them will take up economic events, calendar, expected economic releases, earnings releases, how it can impact our trading, geopolitical events, sector-specific events, etc. Each and every cohort member picks up a particular topic, and you will switch between topics in each and every maintenance session, and we all learn together. Everyone gets a chance to present on all of the topics, and you get to learn together as part of the cohort, and I also get to learn from all of you. There are one-on-one quarterly review sessions. What is your portfolio composition? Opportunities to diversify or not to diversify in some cases. Analyze the setups, analyze the mistakes, scaling strategies that work for you, risk management strategies that work for you. At the end of each session, you'll have a list of things to do, continue doing, list of things to reduce, list of things to stop doing altogether. Right? That would be pretty much the quarterly strategy review. Any questions, feel free to ask. But then the link is available for you to take a look at the masterclass, or otherwise, feel free to connect with me. We can chat about any questions that you might have as well. I'll stop here. Happy to take any questions. Yeah.
Not a not a question. First time I've met you, and looks like in the crowd these are fairly experienced guys. I would be quite a novice compared to most. It's very comprehensive. I thought the presentation was very, very good. This,
Okay.
I think this for me, it's for the serious-minded, and I
Yes.
don't know if there is a preliminary step to graduate into this, if that makes any sense.
Yeah. There is a preliminary step, and I think one of the first things to do is basically to go onto our research newsletter. Start reading as a free subscriber. Start reading our research newsletter. Start analyzing, asking us questions. Right, that helps in a lot of ways to kind of get an understanding of how this ecoeconomics is going, because this is not the usual trading strategies that you see among various stock traders, nor is it going to be the let's say the box standard equity research that you get from various brokers or whatever, right?
Yeah.
Our parameters are going to be quite different. So I think trying to get an understanding of that
Yeah.
would
And
definitely be helpful.
the other thing that comes to mind to me
Mhm.
is having that very strong discipline around all this, because there will be pluses and
Yes,
minuses.
yes,
And I
yes,
realize this is where
absolutely.
the limits and things come in, and before you know it,
Yes,
you start comparing yourself with, oh, but he did okay and I'm not doing okay, and
correct,
all of this
correct,
that will throw you
correct,
off the game completely.
correct,
So,
correct.
how much of
Yes.
that psychology do you get into to make sure that people are really on course, people are really stable, and people follow that rigor with that mental and emotional stability in place? Because I think without that mental and
Yeah,
emotional stability, no matter how good you are, you'll lose this.
absolutely, absolutely. We always say, trading and investing is not for the weak at heart, right? It is not for them at all, right? But at the same time, there are ways to kind of calm this. See, whole of finance is behavioral, right? So while on one side markets will try and tell you that there is an efficient market hypothesis and etc., all your economics textbooks will tell you this, but end of the day, those who are trading are humans, and they will bring their emotions to the table, right? And that is how trading works in reality. So as part of my experience, what I've been doing with a number of junior traders that I mentor as well is, to have very rigorous checklist journaling sort of methods, and also to, one of the things that I kind of say as part of my checklist, when I can share a copy of my checklist here as well. If I've not had enough sleep and I'm not in a calm mind, I don't trade that day. I just don't get in. I don't even touch that day, right? And I say that to all of the other traders that I mentor as well. If you haven't had enough sleep, if you haven't had, or you were partying late or whatever, and you had some emotional disturbances, please don't trade on that day. It doesn't make any sense at all. Likewise, if you have not done all of your analysis before you start trading, you're going to be swayed by emotions, you're going to be swayed by competing behavior, etc. So if you have not done your analysis and your setups are not very clear, please don't start trading on that day at all, right? So it does require a lot of discipline, and I think that is something that we will cover as part of the masterclass as well, in terms of how to get that rigor and how to get that discipline to follow a set methodology, right? You only change your strategy once a quarter. Once a quarter, after reviewing all of the available information, you look at your own journal, look at your performance over the last one quarter. You only make changes to the strategy once a quarter. You don't change strategies every single day at all. Once set up, but again, for you to set that strategy, you have to back test it. You have to do paper trading. You have to do back testing. You have to test if your watch list is really good, if your trading approaches are really good. So you set it up properly, and then you only change it once a quarter. If you're changing it every single day, you find that, okay, there's something that's coming up, or this particular stock is going up 15%, I'm not on it. And there you go. That breaks your trading strategy in one shot. You're not going to make that double, or you're probably not even going to cover the capital. That's the reality here.
Yeah.
Right.
Can I ask you one more thing? And if I'm
Sure.
hogging the time, then tell me as well. Yeah.
I think it's going to be useful for all of us. The questions that you're asking, definitely.
So typically, say, I don't know, say after 3 months or 6 months, you're up and running, because I think it will take 3, 6 months to learn,
Correct.
and make some
Correct.
small winnings, losses,
Yes.
etc., and learn from all of
Yes.
that and figure your
Yes.
strategy out
Yes.
to a more consistent basis.
Absolutely.
But once you've gone past that point, well, two things. Getting to that point, and once you've gone past that point, what is the average sort of minutes, hours per day do you think one would need to give to this? And are there particular times of the day that you need to also think about to be free? Because, we could all be at different stages of our lives where
Yes.
lots of other things, including free time, whether it's parent time, whether it's care, whether it's
Yes.
seva, charity, other things are of importance. And what if you can't give up that time? So does that question make sense for a start?
Yeah. Sure. I'll share from my own experience here, right? For the last 1 year, I've been full time in Helix, but for the last 15 years, I've been a prop trader. I've held on to my full time job, right? So I've only done prop trading during free time that is available. So the way I've done over the last 15 years is I do most of my analysis over the weekend, right? And I set up, some smart trading signals on the stocks that I need to analyze on TradingView, of course, right? You can set alerts on it, etc. I would review the alerts after work in the evening. I would basically go in and trade maybe between 6:30 to 7 or something like that every single day. So on an average, I would have spent anywhere between 3 to 4 hours in a week uh, on most weeks, right? Plus, I will spend time during the weekend, uh, analyzing, reading the annual report. Maybe Delta Airlines, they issued their, financial statement recently. I want to read this very, very carefully. I can't do this during the day because all these years I was working full time and I didn't have the time to do that. So I would, sometimes print it out. I would sit down over the weekend and I would read over the weekend to understand what is going on. I would listen into the earnings conference call recording, right? I would do that over the weekend. Most of my analysis takes place over the weekend. And then, when there are geopolitical events or there is interest rate decisions that are coming up, or maybe a certain economic release is coming up next week, I usually do my analysis over the weekend. During the masterclass, I'll also show what is called as a fundamental chart. It's like a mind map, right? So you can kind of use that to, I can say, reduce the amount of time, or rather, I'll say reduce the amount of noise that's there, because a lot of financial news is actually noise. The real financial news is less than 1% because most of it is not juice at all. It is basically a lot of noise in the market. So you can reduce a lot of the noise by following that, right? But
But
I
that's
would
news
say,
in general, right?
yeah, it is. It is a lot of
It's there
noise.
to kind of stir up things. Yeah.
Correct,
Yeah.
correct. Exactly. You got to be very careful with it. But I would say, uh, in the last 15 years, during the week, I would have spent 3 to 4 hours. And then I spent some time, I would say at least half a day over the weekend, I would spend in terms of, reading. Uh, at any point of time, I wouldn't analyze more than maybe 5, 6 companies. Right now, because we basically run a stock index, we are analyzing 60 companies, but at any point of time, I would only analyze 5 or 6. So in a weekend, I can sit down, maybe look at the annual report, read the financial statement, make my own analysis of it. I can listen into earnings calls. If there are analyst reports that have come out, I can read that. Right, that's how it's been. Yeah.
Can I just ask a question, Swami? Thank you very much for the
Yes.
presentation, very useful. And following up with the
Thank you.
hidden questions, would the shadowing scheme will be better for novice starter like us?
Shadowing meaning?
Shadowing a good trader, which
Mhm.
is successful, both
Mhm.
learn strategy and all that. I mean, presentation and stuff is fine. Leaving it somebody else to do it themselves is also, there's a gap in this.
Yes.
But when you're sitting next to somebody and learning what they're doing, you get it
Mhm.
mostly with this technical stuff.
Absolutely. Yes. One
Is
big
it possible to
challenge.
do? Is it possible to do this? And but do you know that a place that we can do this?
Yeah, there are a few, I can say, trading, shadowing sort of opportunities that are available. I know some prop firms also do this, right? I can share some details on that. But then there is one big catch here, right? Who are you shadowing, and what is their agenda behind it, right? that to me has always been one big challenge that I've had, because many of them have you know hidden agendas, and you never know whether you're following them. uh, you're not too sure of their underlying agenda, right? So most of the social trade or shadowing kind of opportunities come from, I would say, semi-professional traders. They are the ones who kind of offering this on. There's actually a site called MQL5, right, where you have a number of traders who offer trading signals for like £100 a month or something like that. But then you find that most of them are semi-professional traders, and they are working behind a certain agenda for themselves, right? So you're not too sure if it's going to be beneficial for you, because here is my bet here, right? For me, I didn't come into this game with a lot of privilege, right? I grew up in India. My parents were basically, both of them were, I would say, reasonably well educated. My mother was a teacher. My dad was a police officer. So we were not rich by any standards, right? But then the emphasis was on learning. The emphasis was on education as a means for upliftment, right? So what they wanted at that stage, and I would say the same thing about my in-laws as well, right? What they wanted for basically for their kids is the next generation has to be way smarter than them, right? And I think for that there is a lot of work to be done on our own in terms of basically self-learning, which has been, I would say, the number one big gain that I've seen, right? So people say financial literacy. There is financial literacy, then there is financial education, then there is financial mastery, and there is financial intelligence behind it, right? So you've got to go through the stages, right, in order to gain this. But a good start is maybe if you like companies that you see very commonly, start by making a small watch list, right? Start reading more about their business model, how they are making money, right? How they are making money. It's not so much to say, every stock that you buy, a lot of times traders tell you that, the stock is going up 5%, the stock is going up 3%, it's down 14%. It is not that. There is a business behind it, right? And as traders or investors, our first goal is to understand that business behind it, right? Whether that business model is worth investing into, whether it is something that, I would consider as worthwhile, for me to put my money into, right? I think that is the core ask here.
Yes.
Right. So what I used to do earlier on, back in India is when I started off, back then, what I used to do was I used to see some of the, common brands around, right? I used to see a number of buses on the road was Ashok Leyland, right? So I said, okay, fine. Is Ashok Leyland a traded business? Is this business available on the stock market? Can I get more information about Ashok Leyland? This is how it started for me. I wanted to understand Ashok Leyland's business, commercial transportation as an industry. Is it only commercial transportation that they do? Yeah, there is trucking, there is logistics, there is commercial transportation. How good is this business in comparison to maybe Tata Motors? Tata Motors also has so many buses on the road in India and in every other country, right? So how is this working out? How do I compare this? This is how I started off.
Yeah.
Right?
Yeah, I mean, my situation, I don't know about the rest of the people here. I even don't understand that trading software system very well. And it's
Even
so
I
much.
don't. I'll honestly tell you, in the past, like like 15 years back, trading softwares were very, very complex,
Yeah.
right? It was very, very complex, and we were taking, half a day training sessions in order to get to understand it. Today, it's come round to a point where, just click one button and it does the job for you, right? So the systems have become so easy that it could be on the web. And right now, I would say, from my past experience, maybe in the last 15 years, systems have become so easy to use. There are still some systems that are like, I can say ridiculously difficult to use. But for the most part, these systems and broker environments, etc., it's become way cheaper. In the past, we used to pay, back there in India, when I started off with this, we used to pay anywhere like close to 1,000 rupees per trade, right? And even here in the UK, when I initially started off, it was like £10 per trade, right? Commissions and whatever. These days, you're talking of 3p per trade, and the systems have become so easy. It's on the web. You don't even need to install anything.
Yeah.
Right? Previously, you had to install the software, you have to do some configuration, you have to do these settings and this and that. Now there's nothing. You just go on the web. This is the stock. Click here, enter the price, and then go. That's it. It's become very, very easy today. In comparison to the last last 15, 20 years, actually, right?
So to learn and the system and also understand a little bit, probably starting with a very small amount is a useful strategy.
Yes, that is correct. That's correct. Maybe start off with, first of all, making your own watch list, right? Companies that you see around, see if they are listed companies. Like if you buy at Tesco, for instance, and you like the Tesco brand, you want to analyze Tesco as a business, right? If you are with maybe Octopus Energy as a utility provider, you want to add Octopus Energy into your watch list, right? And you basically want to try this out, right? If you're maybe using let's say any one of the cars that you have, and let's say it's Volkswagen, for instance. Can I look at Volkswagen as a stock, right? How is this particular company? Is there a comparison to the industry, right? Is it way better than this? I think that is where we start.
Okay. Thank you very much.
Right. Thank you. Okay. Thanks for the question, and I think it's going to be useful for all of us as well. I think these questions come up a lot.
Absolutely. Thank you very much for everyone.
Any other questions? Yes.
Thank you very much.
Thank you.
Great workshop.
Thank you.
So first of all, you said you've shared the links in the chat.
Yes.
I can't see anything in the chat so far. Just wanted to double check.
Let me share it again on the chat.
Maybe I've joined a little later.
Yeah, probably that. But I'll share it again now.
Perfect. Yeah.
Should be on the chat. But what I'll also do is I'll also post it on our WhatsApp group as well, right?
Okay.
And I should be getting the recording link as well. I'll post it on the WhatsApp group so people can see that. If anyone's missed it or whatever, then they want to see that. They can see that.
Appreciate it. Thank you.
Thank you.
My question is regarding the stock ISAs. I've never opened a stock ISA account before. I've looked into website, but quick two questions on this. First one is there any restriction on trading any US stocks on these stock ISAs, or is it we can just buy and sell any stock?
For most of the ISA providers, they're going to have a restricted list of stocks that they offer on the ISA, right? Okay. The one that has the widest number of stocks available on ISAs is Interactive Brokers.
Okay.
Right? Everybody else, including Interactive Brokers, for instance, they do their own due diligence on which stocks to add onto their ISA product. right?
Mhm.
So they are going to have a certain restriction on how many stocks are available, which stocks are available, what is the volume requirement to be included into ISA, etc. Right? So every ISA provider is going to have these restrictions. Among all the ISA providers that I've seen, Interactive Brokers has the widest number of securities that are available, and they have the lowest fees as well.
Okay. I've compared it with Trading 212. As far as I understood, Trading 212 doesn't charge any commission. But I
Yes,
think there is Forex element, which obviously I'm not too sure.
correct. There is a
Whereas
Forex element. Yeah.
Interactive Brokers is charging a commission. So I was just
Charging
wanted
a
to ask.
commission, right? Trading 212 will allow you to buy and hold on an ISA.
Mhm.
They will not allow you to trade on an ISA.
Okay.
Okay, that is the reason why they don't charge any commissions, right?
Okay.
Whereas Interactive Brokers will allow you to trade on the ISA.
Fair enough. Okay.
There are very few of them that allow you to trade, meaning on Trading 212, you wouldn't be able to put in a stop loss and take profit. Right? You would be able to, on the ISA, you would be able to enter a trade saying, I want to buy 5 shares of Ingersoll Rand, right? Or 50 shares of Ingersoll Rand. You would buy and hold it in your account for as long as you want, and then you can go and sell it. But on Interactive Brokers, you would be able to set up on the ISA itself. You would be able to set up a stop loss and take profit. You would be able to trade them as well. You would be able to do a short as well.
Okay. Is there any limit or restriction in terms of withdrawing money from the stock ISAs and depositing again? I know there is 20K limit, annual limit on it, but
yes, that is
apart
correct.
from that, if I need
That is
money,
correct.
can I just withdraw 5K and then
You can, except you can't put it back on, meaning you can put it back on, but it won't go and top up your ISA limit for the year, right?
Okay.
So if you withdraw it, you lose your ISA limit at that time, right? I think that is what I understand from this, but just check Interactive Brokers for more information, right?
Thank you very much, Sami. That's all
you.
my questions. Cheers.
Thanks. Great. Anybody else has any questions? If not, we can go ahead and close.
Somi, sorry, I would just like to say thank you very much for today. It's been really informative, and I will be in touch with you.
Sure, Jet. Right. Thank you.
Thank you. Yeah, thank you very much.
Thank you.
Have a good weekend. Bye, everyone.
You too. Thanks. Bye.